Today is going to be very interesting because on the one hand, I'll be making my 6 purchases in my community portfolio, and at the same time, there are also some news updates about the stocks in my existing community portfolio. There's really a lot of new stuff going on. We'll take a look at everything calmly, one thing at a time, and as always, we'll start off with the performance. The community portfolio is now 1 year and 4 months old, and as always, we can see the performance comparison here. At the very bottom in yellow, we have the MSCI World from iShares with a return of 15.54%, putting it in 5th place. In 4th place is the S&P 500 in red, with 20.42%. Then in 3rd place is my community portfolio with a return of 24.31%, and in 2nd place is the German leading index with almost 30%. So, a very, very strong performance here over the past 1 year and 4 months. That is, since the beginning of October 2024 for the German leading index. And still in 1st place by a wide margin, in purple, with 40.72% right at the top, is my main portfolio. If you're interested in knowing which stocks I invest the majority of my personal wealth in, feel free to check out my analysis platform. There you can see all the purchases and sales from my main portfolio, as well as numerous analyses and updates on a wide variety of stocks, including many small companies. And what we also see is that in the past few days, everything has taken a bit of a dip, the entire stock market, both the indices and my portfolios. A slight downturn, but it's so minor here that it's hardly worth mentioning. Of course, there will also be periods when things drop much further here, both with the major indices and with my community portfolio, and naturally with my private portfolio as well, because there are times when things don't go as smoothly as they have over the past 10 years in the stock market. There are also phases when things get a lot bumpier and it's much harder to achieve good performance. That's exactly what I hope to achieve with my main portfolio, that I can still manage it, since I invest in a very focused way in rather lesser-known companies, which, ideally, aren't as heavily affected by major crashes as the broad indices are. But now, let's move on to my community portfolio, and as always, we'll go through the stock positions from smallest to largest. I'll pause briefly on the stocks where there are any updates. Of course, I'll also pause whenever I further increase a position here, like when I'm buying more shares. I'll always do that right away as well. And if you only want to look at specific stocks, you can simply click on the relevant one in the timeline below. I'll link each stock there so you can jump straight to wherever you want. We'll start with Worldline, my smallest and most speculative position, and also the stock where I'm most clearly in the red, currently down 65%. However, its weighting is only 0.97%, so it doesn't really have much of an impact on my overall performance. But there is some news here. For one thing, on December 8th, 2025, Worldline announced that it is selling a division, specifically the payment processing platform Payment IQ, to Invest. The transaction will be settled in cash for a total of 160 million euros. So, it's not exactly a small sale, considering Worldline's current market capitalization is 436 million euros. That means, with this sale, they're bringing in more than a third of their market capitalization. What we can also see is that things have picked up a bit from the low point. Here, the low in December 2025 was at €1.31. Since then, it's gone up about 15%. We can zoom in as well, but in the long run, it's clearly gone down here, which is why I'm so deep in the red. But there's another piece of news. As planned, they held an extraordinary general meeting at the beginning of January. On the one hand, they've confirmed their outlook for 2025. They want to achieve an adjusted EBITDA of 830 to 855 million, and the free cash flow is expected to be between minus 30 million euros and roughly 0 million euros. The year is over now, but the figures just aren't available yet. Those were just the preliminary numbers for now. What's much more interesting is how the next 2 or 3 years will play out for Worldline. And the other piece of news, which was already planned and which I've already reported here on my channel, is that the capital increase of 500 million euros has been approved, and that the strategic investors are also involved. We can scroll down here, and we can see that 3 core investors are taking a total of 110 million euros out of these 500 million, at a price of €2.75 each. So, they are paying €2.75 per share in this capital increase. The current share price is at €1.50. That means these strategic investors are paying significantly more than the current share price, and apparently see some added value compared to what the current market is attributing to Worldline. The remaining 390 million out of these 500 million will go to existing shareholders via subscription rights, with these 3 anchor investors also committing to take on another 135 million of that amount. That means they are taking on these 110 million plus the 135 million, and the remaining 255 million can be taken up by the other shareholders through subscription rights. But that would actually mean that there is, of course, a risk here that the existing shareholders do not exercise these subscription rights, so that Worldline would not get the money, those 255 million, because the capital increase is not sufficiently subscribed. But here too, they write that the anchor shareholders, plus others like JP Morgan, have provided a standby guarantee for these subscription rights. This means that if the existing shareholders do not fully subscribe, then these guarantors will subscribe to the remainder, so that Worldline will definitely receive the 500 million euros. From my point of view, that's very positive, and now they have more money available again to turn things around, to achieve the turnaround. And for me, that's exactly what this is, a turnaround opportunity, but also one with high risks. That's why my weighting here is relatively low, and for example, I don't have such a position at all in my main portfolio. With Worldline, the risk is just too high for me, but for the community portfolio, I think a small position like this is fine. The capital increase has also not yet been carried out, but the whole thing will take place in the first quarter of 2026. And what we also see is that they want to do a reverse stock split from 1 share to 40 shares. That means for every 40 shares you hold, you get 1 new share, and that one has 40 times the value, so you'll have a higher visible share price. Ultimately, though, it doesn't really matter. It's just something to make things look a bit nicer here. And so far, I have 100 shares of Worldline, and here I want to increase my position by another 50% to 150 shares. That's why I'm buying 50 more shares here at a price of €1.51 each. That makes for an order volume of €75.65. And the nice thing here with Xstation 5, or with the broker XTP, is that you can already trade such small amounts commission-free, starting from just €10 order volume. So if you're currently looking for a premium broker, I can recommend XTP to you. The link is in the video description. And then I'll go ahead and place the order here and buy another 50 shares. That means Worldline will still remain my smallest position. Next up, we have Volkswagen. Here, we're dealing with a cyclical company. Even with cyclical companies, I usually don't invest large amounts. Here, the weighting is 2.5%. After I bought in, it first went up by 10%, but now I'm actually slightly down by 2.5%. One reason for the recent decline is, of course, the whole conflict with Trump and Greenland, and the EU wanting to introduce countermeasures. That could obviously lead to a downward spiral, and tariffs are generally never good for either side. And if the US raises tariffs on German products, like those Volkswagen supplies, that's obviously a big disadvantage. The whole thing was, understandably, received negatively on the stock market. The share price initially dropped, but I'm still invested here for the long term, which is why I'm buying another share. At the moment, I've bought 4 shares, each for about €100. Now I'm adding another share for €98, bringing my total to 5 shares. There haven't been any major updates recently with Canadian National Railway, so let's move right on to Adobe. There is some news here. Currently, I'm down 15% on Adobe, with a weighting of 3.24% in my portfolio, and they've released 2 announcements. The first announcement was on January 7, 2026, where they reported that the holiday season in online retail achieved a record revenue of $257.8 billion. I find this announcement a bit odd, because they're referring to the overall market and the announcement doesn't actually address what this means for Adobe specifically, or how well Adobe's business did in the holiday quarter. So let's just set this announcement aside for now and move on to the next one. And that one came out on December 10, 2025, shortly after my last portfolio update. And here, they've just published record numbers for Q4. So apparently, quarter 4 went really, really well. And if we scroll down a bit, we can see that in the last quarter, revenue rose significantly from $5.36 billion to $5.99 billion, which is about a 10% increase. At the same time, for the full year, they were able to increase revenue from $20.5 billion to $22.9 billion, and they also managed to increase net profit. Down here, from $1.7 billion to $1.85 billion, or for the full year, from $5.5 billion to $7.1 billion, a significant increase. Earnings per share jumped up to $16.70, and we can also see here that they are clearly buying back their own shares significantly. Last year, it was still $450 million. Now, in the past year, it was only $427 million on average, or even less recently, because in the last quarter it was just $417 million on average. So Adobe is still using its free cash flow to buy back its own shares. Nevertheless, the share price has continued to go down. There are concerns in the stock market about new competition from AI, with many people fearing that Adobe will be used less and less, and accordingly, the share price has dropped significantly since its highs. I took a contrarian approach here and entered with a small position, and I'm adding to that position again today. We can also see that Adobe, for example, is currently valued at a P/E ratio of just under 18, even though they are still continuing to grow. However, as I said, there really are risks due to the competition. So, the investment might not work out, but I'm still buying a third share here for about €250. Just confirm once, and with that, I've increased this position by 50%. And now we come to Alibaba, where I'm currently almost 70% in profit. I bought in here at an average price of €81. Currently, we're at €137 here. I had already sold part of it with a 43% gain, and there was some good news here. For example, in the South China Morning Post, Alibaba's Qwen product family has reached 700 million downloads, making it a leader in the global adoption of open-source AI. Let's scroll down and see what else they have to say about it. According to a published study, the estimated downloads of Qwen in December alone exceeded the total number of downloads of the next 8 most popular models on the platform worldwide, including models from Meta Platforms and OpenAI. So, what we have here is truly a very, very popular product, which was also well received in the market, because AI is, of course, a current hype topic, and a lot of people are jumping on the bandwagon. I got into Alibaba at a very, very low price, back when the whole AI topic hadn't really come up yet on the stock market in relation to Alibaba, and I was able to buy in at a PE ratio of 10. In the meantime, the valuation has become significantly higher, and right now I'm not planning to add to my position, but rather, I might even consider selling if the stock remains this popular and I can lock in a good profit. If I sell, of course you'll hear about it here on my YouTube channel. I always make separate videos about my sales in my community portfolio. If you want to stay up to date, just subscribe to the channel, turn on notifications, and you'll always get an alert. I also really like this here. I bought in down here at prices around 80 euros. By now, we're at 140 euros here. At one point, even back in October, we were already at 163 euros, and I'm still holding about half of my positions. That means Alibaba currently makes up 4.46% of my portfolio, and let's keep going. There haven't been any major updates on Amadeus Via, but there have been some for Occidental Petroleum, and right now, I'm weighted at 7.5% here. So this is already one of my larger positions, and currently it's down 10%. The news isn't really anything new, to be honest. They just announced on January 2nd that the planned sale of their Oxygen division has now actually been completed to Berkshire Hathaway. They sold it for $9.7 billion in cash. And of course, I've already talked about this in my earlier videos. Now it's actually been completed, which means Occidental Petroleum can further reduce its debt. I see this step as very, very positive, as it allows them to focus more on the oil business and sell off this non-core division. Here you can also clearly see all the gray dashed lines. That's where I've been buying more Occidental Petroleum from time to time, roughly at the current prices. And today, I'm going to buy a few more shares again. So far, I have 32 shares. Today, I'm buying 3 more for a total of 110 euros, and again, just click confirm and the purchase has been made. Let's move on to my 6th largest position, which is Atkore. I'm currently up 15% here, with a weighting of 7.52%, and there have also been some interesting updates. For one thing, the short sellers have continued to pull out, so there's been a significant decline in short interest here, as the short interest dropped by 15.9% in December. Just a few months ago, there were still quite a few people shorting Atkore. Now, that's gradually dissolving, because there's a real possibility that things could move up faster here than many originally thought, because there are always rumors going around that Atkore is going to be taken over by private equity firms, since the valuation really isn't that high, which is also my opinion. That's why I got in back then, and there have always been these rumors, and they just keep persisting. That's one possibility. If that doesn't happen, I still don't think Atkore is too expensive. That's why I'm not selling right now, and my main investment case here isn't the takeover, but rather that I see a generally good risk-reward ratio, and we can see that here as well. Down here, I kept buying at prices around $56 to $60. Right now, it's sitting at $70. I can zoom in again if you like. We can see that recently, things have been moving up nicely here. How things will continue, of course, we'll see in the future. It could also go back down again. I'm not a fortune teller here. I just always assess the opportunities and risks. Now let's get to my top 5. Here we have NN Group. With this stock, I'm already up 52%. On top of that, I received another 7% in dividends, so I'm almost 60% up. The weighting is just under 10%, and while there haven't been any major updates here, let's still take a quick look. They already released their half-year figures in August. Here, the free cash flow is expected to be 1.6 billion euros. By 2028, the free cash flow is projected to be over 1.8 billion euros. That's about 7 to 8% annual growth. And if we take another look at the share price, you'll see I got in at just over 40 euros. Now we're at 65, and this is a company that grows at about 5 to 7%, but the share price has jumped 50% in a very short time. So what does that mean, of course? It means the valuation level has gone up significantly here. From my point of view, it's still not exorbitantly expensive, because we know they want to achieve 1.6 billion euros in free cash flow. They have a market capitalization of 17.5 billion euros, so that's a price-to-free cash flow ratio of about 11. That's not particularly high. They pay a high dividend and buy back their own shares. Still, it's a company that doesn't grow particularly strongly. At the same time, the currently rather declining interest rates are a bit of a negative, but of course that's not a disaster for NN Group. Still, at current levels, I'd be more likely to reduce my position here rather than expand it further. As I said, if I do reduce, you'll hear about it on my channel. In 4th place is Novo Nordisk. Right now, I'm down 4% here. The weighting is almost 10% in my community portfolio, and with Novo Nordisk, I've always kept buying more whenever the price dropped. Even when it was around 39 euros, I bought again. Currently, the price has come back down quite a bit. Here, there's been a gain of over 30% in the last few weeks. It's currently at 51 euros, and I don't really want to go into much detail here. There was some news here, but I covered that in a separate video. I'll link it for you up here. Feel free to check it out after this video if you're interested in what's new with Novo Nordisk and how I see the current opportunities and risks. That's why we'll jump right into my top 3 and continue with Baidu. Baidu currently makes up 11.59% of my portfolio. I'm up 54% here. Much like with Alibaba, I bought in at around 80 euros when nobody wanted Chinese stocks. Now, Chinese stocks have become more popular again. The price has shot up in a very short time. From August 2025 until now, that's up 76%. So, the market now has a different perspective on Chinese companies again. They're being viewed more positively again, and that's something you always see on the stock market. There are phases when everything is seen negatively for certain sectors or individual companies. Those are the phases when I actually want to buy, when stock prices are being pushed down and everyone is too scared to get in. And when things go the other way, when everyone gets euphoric and starts buying and prices are already pretty high, that's when I try to sell. That doesn't work everywhere, and not with every stock, and not every investment case of mine pans out either. But over the past 10 years or so, I've done very, very well with this strategy. And just how irrational the stock market can be, we can see here. For example, on January 1st, Baidu announced that they want to take their subsidiary Kunlun XIN public, and there was a financing round not too long ago. At that time, the company, the semiconductor division, was valued by Baidu at $3 billion. But Baidu only owns about 60% of this company. 60% of those $3 billion is about $1.8 billion. So that's currently the value of the semiconductor division that belongs to Baidu. And yet, after the announcement of the planned IPO, the share price went up by about 10%, and a 10% increase means that the market capitalization rose by about $5 billion. For news that something is going public that's worth about $1.8 billion. So once again, the market reacted very, very enthusiastically to this news. And here too, I have to say, Baidu is no longer as cheaply valued as it was when I first invested. That's why, at the moment, I wouldn't buy more here either, but would rather consider reducing my position. There will also be a video about this when the time comes. With Kaspi, my second largest position with a weighting of 11.79%, there haven't been any recent updates, so let's move straight to my top position, which is PayPal. At the moment, I'm about 19% down here. The weighting is at 12.7%, and you can see here that last year I kept buying in at prices around 60 euros, roughly speaking. And then again, as it kept dropping towards 54 euros. And if we zoom in now, it actually went back down to even 47 euros. That means the current market capitalization is about 56 billion euros. That's roughly $50 billion, and from my point of view, that means PayPal is valued very low. Because if we look at the free cash flow they want to achieve, here's the latest update from October 2025. They wrote that the free cash flow for the entire year should be between $6 and $7 billion. Let's take the lower end here, $6 billion. Of that, they use about $1 billion for stock-based compensation. That means about $5 billion remain, with a market capitalization now of about $50 billion. That means a price-to-free cash flow ratio of 10. And that's even though PayPal is still growing right now and a large part of their free cash flow is being used for share buybacks. And that's why my position here is weighted so heavily, and I currently have 41 shares in total. After the recent price drop, I want to buy more here. I'm buying 4 more shares for a total of 190 euros, which means I've increased this position again, even though it's already my largest holding, because I still see the risk-reward ratio as favorable. Now let's move on to my new purchase, which is JD.com. Their stock has dropped significantly recently, going from about $46 to $28 within a year. That's a drop of 40%. And here I'm buying 15 shares for about 370 euros, opening an initial position. And if you're interested in why I'm getting in here, I recently made a separate video where I went into more detail about the stocks Baidu, Alibaba, and JD.com. Feel free to check out that video next, and see you next time on German Value Investor.